Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us at the MarketSite studio, we have John Colescott. He's the President and Chief Investment Officer of CEF Advisors and CEFdata.com. John, it is great to have you with us in person at MarketSite. Welcome to TradeTalks.
Great to be here.
Tell us about your firm's work and what you do for clients.
Yeah, so ClosedEnd Fund Advisors is a 33-year-old RIA firm focused on closed-ended management companies. So that's listed closed-end funds, interval funds, tender offer funds, and both listed and non-listed BDCs. We're in our 12th year of a data business, CEFdata.com, where we organize and think of thoughtful ways to produce both information on the wrapper of the funds as well as the guts and historical references to what's useful for trading and investing. And then there's about 750 funds in the space, about $625 billion in gross assets.
There's a lot of acronyms in our business, so explain to us exactly what a CEF, a closed-end fund, is.
Yeah, so a closed-end fund is the original investment company, goes back to 1893 at the New York Stock Exchange. It's really a listed pooled vehicle where there's an active manager. In the US market, it's regularly an income focused, and so it's a great way for investors, whether they want to buy $1,000 or $10 million, to gain exposure to different funds than traditional open-end funds and ETFs. And it really gives you a chance to both think about the NAV, the sector that you're in, as well as the wrapper data. And you really have to analyze each levels as part of your investment thesis, in our opinion.
Silicon Valley banks seem to have sent ripples through the market.
You noticed.
I did notice. How did it impact CEFs, if at all?
So it's interesting. On the listed fund side, the impact came on the preferred equity side. There are really two pieces of exposure there. There's regional bank investments in those funds, as well as CoCos based over in Europe. The index we follow has about a 12% pullback in March of 2023. And the neat thing is, if you really think about the closed-end fund wrapper, it's an active management with a stable capital base, so he's able to make active decisions through whatever crisis is next. One fund we think is a good opportunity to consider is Nuvena's NPFD. It is a preferred fund that recently reduced its dividend a little bit, but a 6.7 yield. It's 98% qualified dividends, a lot of tax-driven investors in my universe, and around a 14-15 discount. Historically, these funds trade well eventually over time.
You also mentioned BDCs, business development companies, is a big part of your database and the work that you do for clients. Was there any impact from SVB on that space?
It was initially. There's a lot of concerns. We called some of the analysts we're close to by lunchtime that day. There was no real direct impact, but there's a couple BDCs that have a lot of exposure to the companies around that universe. And so we found the BDC index was down 11% that first day, which is a pretty big move for the investments that are pooled and diversified. There's really two interesting BDCs that accentuate the different bookends of the market. There's a smaller, more focused BDC, RWAY. It's currently around a 15 discount, and it recently was around an 8 discount, so widening happened across the sector. And it has a 15 yield, but what's impressive, it has like an average debt on yield underlying the portfolio over 16%, so there is good dividend coverage there. It's a newer BDC, but well thought of in the market. But sometimes people want a more established BDC. Kind of the focus player in that space is Hercules, HTGC. It's about an 18-year-old, $3 billion portfolio. It has recently traded from a 50 premium to book value to a 20, wow, and has about a 12 yield, but a 20% dividend coverage. And what's really important is our BDC index has a one-year dividend growth rate in dollar terms of 20% and around 15% dividend coverage going into whatever's next.
Wow, interesting. All right, John, appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.